Let's welcome the crucial day for Wall Street, armed with the fresh statistics and analytics. This is a review of the New York trade. High-tech stocks again suffered a punch on Tuesday. Key stock indexes closed mixed yesterday. Investors have a premonition of a market crash, and Wall Street indexes were trading mixed in the American pre-market in anticipation of the Fed's minutes. On Tuesday, high-tech stocks went through another challenge. The slump dragged the Nasdaq down. The index lost 2.4%, and now it's 30% down from the levels of early January. The Dow Jones edged up 0.15%, the S&P 500 shed 0.8% to close at 3,941. Today, Wall Street indexes tried to recover in the pre-market, but they are trading mixed in the early New York session. Investors will remain frustrated until they discover some clarity in the Fed's minutes. The S&P 500 is expected to trade in the corridor between 3,820 and 3,980. Massive selling is interrupted sometimes by false rallies. Yesterday, Snapchat was the worst performer as the company admitted a complicated macroeconomic environment. Its stock stumbled almost 43%. The stocks of Apple, Microsoft and Amazon lost from 0.5 to 3.25%. Meta stocks dropped 7.83%, thus having raised $53 billion of market capitalization. Tesla stocks fell 6.97%. Its securities have slumped 39% since the beginning of the year, and now trading below the price when the company was added to the S&P 500. Twitter stocks also slipped 6%, having negated the expected revenue. Amid this gloomy environment, the bullish trend is out of the question. Nevertheless, another false rally could happen because of the US Fed and its minutes. Today, traders will look for any dovish signs in the Fed's rhetoric. Financial markets downgraded their expectations of a pace for monetary tightening at 3 meetings to follow. So, investors have a faint hope that the Fed will soften its rhetoric. Investors cannot regain optimism due to fears of a slowdown in the global economy and even a recession. The US dollar had an unlucky day on Tuesday. Its index fell to the lowest level in months, weighed down by Lagarde's statements and the euro's rally. Today, the index rebounded to 102.30 amid the rising yields of US Treasuries. The expected corridor for the index is seen between 101.70 and 102.98. The US dollar regained its footing but remains not far away from a one-month lows. Weak home sales in the US convinced traders that the US Fed might revise the pace of monetary tightening. Besides, Federal Reserve Bank of Atlanta President Raphael Bostic warned that sharp rate hikes could entail grave economic upheaval, calling on his colleagues to act cautiously. At the same time, Jerome Powell confirmed once again that interest rates would be increased until clear evidence of easing inflation is detected. Fresh statistics today indicated lower activity of manufacturing companies and fell short of expectations. US durable goods orders rose 0.4% on months, lower than growth in March and weaker than the consensus of a 0.6% increase. The USD CAD pair got stuck at around 1.28 yesterday, and today it's trading higher within the corridor between 1.2820 and 1.29. The currency pair is likely to escape from the trading range upward today. The firm greenback is capable of pushing the price up. The highlight of the day is the Fed's minutes which will set the tone for the currency market. Thus, the USD CAD pair is going to trade with a high volatility. The crypto market has come to a standstill. Oddly enough, Bitcoin was unaffected by a slump in the high-tech stocks. The flagship crypto was trading with minor fluctuations at about $29,400. The crypto market seems to gather strength. Technical analysis suggests it's likely to keep on trading sideways today. Bitcoin is expected to trade in the range of $28,640 to $30,900. Nevertheless, the market could give an unpredictable response today. One thing is certain, the stock market is very sensitive to the content of the Fed's policy meeting. Let's wait and see. See you online tomorrow.